to what we have to say today. We understand that the home buying process can be, it can sound very tedious, intimidating sometimes. So we are here today to help walk you through the process so that you can feel confident about it. By a show of hands, how many of you guys have purchased a home before? Okay. How many of you guys plan on purchasing a home this year? All right. That's what I'm talking about. It's time, guys. It's time to face our fears, purchase some assets, and buy up the block. Let me hear you say, buy the block.
Buy the block.
Yes. So you're in the right place today. It's going to be a lot of information coming at you. So we encourage you to take notes, like I said earlier. Write your questions down. We'll have a segment at the end of the presentation for questions. We'll be answering your questions. And we also may have some questions for you. And we also may have some prizes for you. I don't know, I can't confirm or deny. So pay attention. And now I'm going to introduce our presenters for today. Now I'm going to introduce our presenters for Okay, so these are our real estate agents on our team. As you can see, Mr. James Peters.
Whoop, whoop.
Himself.
Oh, sorry, no.
He's in the building. We have Miss Kimberly Campbell in the building. I am Jessica Wilhite. Let Wilhite get you right. We have Iman Helms in the back here. We have Risa Washington. We have Mr. Raymond Walker. Phenomenal agents, guys, by the way. And then on the next slide, we have the rest of our team. They couldn't be here with us today, but we all work collectively together. And then for our vendors that are going to share some valuable information with us today, we have the Miss Lisa Brittenheim with us. She's going to talk to you about financing and how to get pre-approved for a home loan. We have our home inspector, Mr. Tucson Hill.
Tucson
Hill. I almost had it.
Close.
Mr. Tucson Hill. And then last but not least, we have our attorney, Ms. Brianna Ward. She's going to talk to you about the closing process. Is she here?
Not yet.
Oh, okay. Well, yeah.
When she gets here.
That's the plan. So without further ado, I'm going to pass it over to Ms. Kimberly Campbell, and she's going to talk to you about the benefits of owning a home.
Good morning. So by show of hands, what are your reasons for purchasing your home? What's your reason for purchasing your home? What's your reason?
Tired of building somebody else's credit.
Your home. Absolutely. Anyone else? Absolutely. So for me, you guys, it was appreciation, equity. I understand that everyone wants to be happy. For you, it's renting. You want to own your own home. I think someone's upstairs. You want to own your own home, but most of all of us want to be happy and create wealth too. I know when I purchased my home at 405. Okay, that was 3 years ago. I owe about $389, and then the value of my home is at $563. So
Wow.
do that math. It's some great equity, and that's just in the past 3 years. Of course, I got it right at the right time too. But we have some great buys out here. We will get you through the process. We will make you happy. When you walk through that door, it's gonna be like welcome home, and we're gonna make it happen for you. So for tax appreciation, and most kids who grew up in a home or people who grew up in a stable home, they want a family home. They want their own home. They want their own town home. So why not? Why not create wealth? Why not have your own? Stop renting and building somebody else's credit, like you said. So definitely. So I'll pass it over to Ray, where he'll speak more about the home buying process. Ray?
Yes, hey, good morning.
Good morning.
My name is Raymond Walker. I'll be going over the home buying timeline with you. The first step in the home buying timeline is to get pre-approved. That pre-approval letter is very important when you're going looking at homes and you kind of know what you're looking for, you know what price you can afford. And our loan specialist, Lisa, will go more into that pre-approval problem. But that pre-approval letter will make your offer way more attractive on home, knowing that you already have some financial backing. The next step will be to find a realtor. I'm so glad all of you came here. Kind of already found one. But once you find that realtor, you're gonna make sure you get that agreement signed. That way you know that agent owes you a different level of responsibility. Next, then after you get that agreement signed, it's time to find your dream home, which is the fun part. You get to go to showings, open houses, and just check over and make sure that your home is your dream home, you know? Once you make that offer, the offer is accepted, then you move into due diligence where we complete inspections and appraisals. That inspection will protect you, and you will know what you're getting out of your home. Then that appraisal will protect the bank to know that the value of the home is accurate. After we get through the inspection and approval, then we go underneath waiting for the loan to be approved. When we're waiting for the loan to be approved, it's important not to make any new financial moves that will affect your debt to income ratio. And make sure that your credit score, that doesn't affect your credit score also. Lisa will also go more into that. After that, you must get ready for closing. You wanna make sure that you review all the paperwork to make the closing process easier, know how much you do at closing. Next, we can move it in. After that house that you buy, it's time to make it your home, get the furniture, get all the knickknacks that make it yours. Next, we have Lisa with Certainty Homeland to go over.
Good morning, everyone.
Good morning.
Get excited. This is the exciting piece.
Right, we're talking the money now.
If you had your own way, you would probably want to pay cash for the house and not have to get a loan, right? Because some people hear so many different, like, horrible things about getting a mortgage and how long it takes, or your brother or your cousin or your mom or dad, when they purchased it was this or was that. So first thing I would say to you is, don't listen to anything that they say, because their experience was their own personal experience at a particular point in time. So what I have to talk to you about today is, what is the reality today of getting a mortgage loan, right? When I talk to first-time home buyers, and I've worked with a lot of first-time home buyers, the biggest thing that kind of scares them when it comes to getting a home and getting a home loan is credit, right? Do any of you have any questions about credit? No, nobody has questions about credit. I'll just skip that part. Nobody cares about the credit. But your credit is like the ticket into the stadium, right? Your credit score. Where do you sit in the stadium? It's kind of like getting seats to, a major event, right? You can have the great seats right up front. You can have the nosebleeds, and it's all about how much you pay for the tickets where you're seated. Your credit score puts you in a particular seat when it comes to getting a particular loan, when it comes to getting a rate. The higher your credit score, the better the rate that you'll get. The higher your credit score, the more options you have for loans. James has a question.
How does my credit score need to be so I can get Beyonce tickets?
So credit score is really important. Most people say, well, I have an idea of my credit score because I look at Credit Karma, right? Or, we'll talk about that. Or my bank gives me my credit score every month, right? Because they do. Credit Karma, let's talk about that first. Credit Karma uses something called Vantage credit scores. They are not the same scores that lenders see when they pull your credit for a mortgage. There are mortgage FICO credit scores, and they're different than Vantage scores. Vantage scores weighs the information on your credit report differently than the mortgage scores, right? So it's the same information that's being viewed, but the weight that's given to it is different, okay? What about the credit score that you get from your bank or your credit card company? That's the FICO 8 score, right? The FICO 8 score weighs the information on your credit for the most recent 2 years, and that's how the score is compiled. Whereas mortgage credit scores weighs the information on the credit report for the most recent 7 years. That's why in general, your mortgage scores tend to be lower than the other scores that you see. Some people, it's the same, it's even higher, but in general, it tends to be lower. So you may say, Lisa, where can I find my mortgage credit score without having a lender or loan officer like you pull my credit because I'm not ready yet? Great question. And pen, write this down? Okay, couple places you can go. myfico.com. MyFICO. myfico.com. You can go there. You're gonna have to pay for a subscription to see the mortgage score, right? I think it's about $35 a month. So before you're ready to have a lender pull, just go and pay for a subscription and get the mortgage scores. Because if you go to MyFICO, you can get your regular FICO 8 score as well, and that's not the same thing. We want to see the mortgage scores. You can also go to Experian.com, Experian, Experian.com. Same thing, do a subscription, get your mortgage credit scores. Make sure you're getting the mortgage credit scores. If you want to see the details of your credit, right, what's actually on my credit, you're going to go out to annualcreditreport.com. ANNUAL, creditreport.com, no spaces between words. And you can download your Equifax, your Experian, and your TransUnion credit report, and you can get those for free. You can view the details of your credit report twice a year for free at annualcreditreport.com. So what makes up your credit score? You know that. What makes up your credit score? Like a lot of people say to me, what do I need to do to have great credit? You know what my answer is? Pay your bills on time. That's it. If you pay everything on time that reports to your credit report, you're gonna have great credit. You're gonna have a perfect credit score, it's 850, but you'll have great credit. Why? 35% of your credit score is comprised of your payment history. So if you're paying things on time, you're in the game, right? If you miss a payment, it's really gonna ding your credit score. Especially if you miss a payment like relatively close up to the time that you're trying to apply for a loan. So we're in February, almost over, October. If you missed the January payment on the car loan, guess what? That credit score could really take a deep dive just by missing that payment being 30 days late. So 35% of your credit score is made up of your payment history. The next 30% of your credit score is made up of your balances. So what, you're like, Lisa, what do you mean by that? You have revolving credit. What's revolving credit? It's basically credit cards, lines of credit, right? So how do you use those lines of credit? How do you use those credit cards impact your credit score? You want to be, ideally, if you have a good number of cards, and you don't really need to have a lot of credit cards, a couple of credit cards is fine, is enough. If you're at 30% of your credit limit, so let's say your limit is 1,000 and your balance is on credit. If you're at 50%, it's not going to be as good, right? It's going to start bringing down your credit score. And if you're pushing the limit with your balances, so you're like 80, 90%, 95% of your limit, you're going to start to see it negatively impact your credit score, right? So these two factors, your payment history and your balances, your credit utilization is another term that you'll hear. That's what does that combine? 65% of your credit score?
Wow.
That's a big deal, right? So if you missed a couple payments in the past and you just got overextended on those credit cards, guess what's happening to your credit score? It's going down, right? It's going down. So many times the best way to positively impact your credit score, if it took a hit and you have credit cards with high balances or you missed a payment, is to get caught up on the payment, make sure it's current, because if every month you're you're rolling with a late payment. So let's say you missed a payment in January. In February, you're making a payment in February, that's really your January payment that you're paying in February. And then in March, you're really making your February payment. Guess what? Every month that creditor is reporting you 30 days late. And every month your credit score is taking a hit. So what you have to do is make the January payment and make the February payment. Now you're caught up, and then continue to make your payments on time to improve your credit score. You're preparing to get a mortgage? Pay down the balances on those credit cards if they're too high. That's going to improve your credit. The next category that has the third highest impact on your score is your credit history, right? Length of credit history. So if you're just starting out with credit, so you've got a credit card, small balance, you're paying everything on time, and you're trying to compare your score with my score, and I've had credit for a long time, and I do the same thing, I pay everything on time, and I have no credit card balances. Guess what? Your score is not going to be as good as my score, because your credit history isn't as long as my credit history, right? So you have a short credit history, you can still have a good score, but you're not going to have an 850 or an 835, because you only established credit less than 12 months ago. Okay. But it's never too late to establish credit if you don't have credit. Does anybody in here think they don't have credit? So that's not a problem. Okay, good. But credit history matters. The longer you have credit, the better of an impact it will have on your credit score. Right? And then the next other categories are the type of credit used and new credit. So let's talk about the type of credit used. It's important to have a good mix of credit. What do I mean by that? What do I mean by that? A good mix of credit.
Credit cards, loans, lines of credit.
Yeah. So credit card, or lines of credit, that's in the revolving category, right? Loan is in the installment category, right? So you can have revolving, installment, that's a good mix. When you add a mortgage to that, it's a different type, that's really going to boost your credit score. Having a mortgage and making the payment on time is going to enhance your credit score. So you're in the right place with the right group of people to help you get a home. So not only does it build appreciation and equity, you can actually also improve your credit. But having a good mix. Sometimes I see clients who they only have revolving credit. There's no installment. And so the credit score could be okay, could not be okay depending on what their balances are relative to their limits. Now, I'm not going to go suggest you go get a loan just to improve your credit score. Why? Because that loan is also going to impact your debt relative to your income. And that may have a negative impact on how much house you can get qualified for, right? But when I do see your clients who most people say they have to have a car loan. They already have a car loan, but they don't have any revolving debt. And I hear this a lot from first-time home buyers. They go, I just don't want to get in trouble having a credit card. I just want to get in trouble. What's the proper way to use a credit card? It's not to use the card because you don't have money to pay for something, right? It's to use the card to build your credit history and to improve your credit score. So how do you do that? Ideally with a credit card. Make a purchase and pay it off. But it depends on the amount of the purchase though. If you have limited credit and the credit card is the first credit card that you have, it's surprising. If your credit limit is 30% on that one credit card, you're going, well, Lisa, you said 30% is fine. But if you have just one credit card and you're 30%, your score is not going to be as good as somebody who has one credit card and has a $10 balance. So what's my advice to clients when they're just starting off with a credit card? You like coffee? Hot chocolate, whatever. Soda?
Yes.
You might have to buy a 6-pack of soda. Spend $10, right, on the card. You're going to get a statement that says, okay, you owe this and you need to pay it by this date. Pay it off before that due date. And you do that every month. $10? Yeah, there's no reason to spend any more than that. Some people say, well, buy groceries and Well, if you have a card that's a $300 limit, and you spend $200 on groceries, because groceries these days aren't cheap. $200 is probably just 5 items at Publix. So you buy 5 things, you just spent $200. You're almost maxing out your credit limit. So that will not work in your favor. Safe, $10 or less. That's it. Okay? New credit. It's important as you're leading up to getting a mortgage that you don't go out and start opening up new accounts thinking, I need to build my credit, I only have 1 card, I need 5 more cards. Those inquiries have an impact on your credit score, a negative impact on your credit score, the more inquiries you have, right? You're shopping for a car right before you get a mortgage, I recommend that you don't do that. But if you have to, my advice is narrow down the lender that you're going to go with and minimize the number of inquiries that you have, right? Inquiries is an indication that you're opening up new credit. If you're opening up too many accounts in that short period of time, it's going to bring down your credit score. Okay, so it's important. Now, here's a big difference between a mortgage inquiry, and all the other inquiries. If you are shopping for a mortgage, you can shop with several different lenders at the same time, as long as you make sure those lenders are pulling your credit within a 30-day window of each other. I like to say 14 days, right? Because mortgage inquiries are treated differently than every other inquiry. The impact to your credit score, even though you may have 3 lenders pull within that window of time, the impact to the score is the impact of 1 inquiry. Now, if you are shopping for a car and you have 3 lenders pull your credit, the impact of each of those inquiries will be felt on your credit report. Because it's possible to buy 3 cars at the same time. It's not typically that somebody's going to get 3 mortgages at the same time. That's the reason why mortgage inquiries are treated differently than other inquiries. Yes, James?
So I want to just reiterate that point, because I mean, I know that comes up all the time in terms of getting pre-approved. You know, folks are kind of saying, hey, I don't want to pull my credit until I'm ready. But like she said, basically on the mortgage inquiries, you know, you basically got a 30-day window where you could have, you know, have them pulled. All right, so you can shop your rates, man. All right, so keep that in mind. You know, this process, you still got to break eggs to make omelets. So, you know, but just don't go out and don't have no car, no furniture, none of that while you're doing the process, because that doesn't help.
Right, yeah. Minimize all those other things when you're leading up to getting a mortgage, right? Pay everything on time, get the credit card debt eliminated if possible or down to a minimal amount. Make sure you have a good mix of credit, and watch out for the new inquiries. Now, on the theme of inquiries, let's go back to the soft versus the hard inquiry. Okay, because you're going to hear this, right? What's a hard inquiry? Who wants to tell me what's a hard inquiry? You go ahead and read it. Any audience participation? What's a hard inquiry? Well, the inquiry is actually the check that the lender is doing. So it's a pull on your credit. Think about it that way. The inquiry is a pull on your credit. So you're applying for a loan. I'm inquiring on your credit. So it's a credit inquiry. I'm checking your credit. It's a credit inquiry. There are hard inquiries and there are soft inquiries. Okay? Hard pulls, soft pulls. What's the difference? The hard pull could impact the credit score, and the hard pulls are actually for the lender to basically, you know, take you through underwriting, right, and make an actual decision on your loan. A soft inquiry is basically, think of it like, has anybody ever gotten like a credit card pre-qual letter in the mail? Right, where like, you are pre-qualified for a card of $5,000, blah, blah, blah. But then you still have to apply, right? What they've done is they've just taken kind of like a snapshot view of your credit and it meets a particular criteria that the lender has. And so they're like, okay, everyone that meets this particular criteria, I can send them an offer, but you still have to apply. And if you want to move forward, then they would have to do the hard pull of your credit. So there are a lot of lenders that will only do a hard pull of your credit when you're applying for a mortgage loan to see if you're pre-qualified, right? There are some lenders that can do a soft pull on your credit to do a pre-qualification. It's not a pre-approval, it's a pre-qualification. They've looked at credit. Typically with a soft pull, one bureau is reviewed, so just one credit bureau is reviewed. And again, when you can go look at all of the inquiries on your credit report, and on the soft pulls, you will not see that show up as an inquiry because it's not a hard pull of your credit. So there's some advantages to the soft pull. I mean, the lender can pull one credit bureau, look at it, see the debt that you have, kind of give you a ballpark idea of this is what you would qualify for. And I like to call it, there's no harm, no foul. If you're not where you need to be, then we can talk about what you need to do to improve upon the credit, right? And it's not a hard inquiry. But if you want to move forward, if you like what the lender is saying, you like the terms and all of that, you can move forward and have them do the hard inquiry, the hard pull. Pull all three reports, then you will see that on your credit report. You'll see that actual lender that pulled the credit, and they'll use that for underwriting the loan. So just know when you hear the terms hard pull or soft pull, what that actually means. Yes, I'll take the back and then I'll take the front.
I've heard that when they pull the credits, I don't know if it's true or not, do they go with the lowest of the three bureaus? The
That's
lowest
a
credit score?
very good question. So the correct answer is, we go with the middle score. What's the middle score? So you have three scores, each bureau, TransUnion, Experian, Equifax, right? That middle score can come from any one of them. It just is, where do the scores lie? So do I have a pen here? Can I? There you go. Visualization, if you guys can see this. Oh, yeah. Like that one. I'll give you that here. Okay. So you have three scores. So. All right. So tell me, what's the middle score?
720.
Okay. Why is that the middle score? It's in between the highest and the lowest. 720 falls in between the highest and lowest. That's what middle score means. That's it. It's not an average, not a median, doesn't get that complicated. It's simply, what's the score that falls between the highest and lowest score of the three? That's what lenders use.
Good question. I'm gonna give you a book here.
All right.
Like,
So credit.
Oh, Lakers jersey, never mind.
Credit is the biggest deal when it comes to getting a mortgage. It impacts, like I said, the loan program that you may be eligible for. It's going to impact the rate that you may be eligible for. It will impact how much debt a lender is willing for you to carry based on your income, and ultimately how much you can afford when it comes to a mortgage, right? It's a big deal. But don't be alarmed. You know, work with a lender that's willing to work with you and help you, make you feel comfortable. Because I tell people, this is not life and death. If your credit score is not where it needs to be right now, that's okay. In time, you can get it there. Okay? Yes?
I had a question. I was a little confused when you said pre-approved and pre-qualified.
Good question. Oh, thank you for leading me down that road. Okay.
What up, Bump?
Another book, all
Another book,
right.
yeah.
Are these James Plants in the audience?
Right, exactly.
Okay. Pre-approval, pre-qualification, great question. So pre-qualification basically is, you talk with your lender, you fill out an application, they pull your credit. It could be a hard pull, it could be a soft pull depending on the lender, right? They review your credit, and they may even ask you to send them some documents to validate your income, your assets, bank statement, things like that, and they go, okay, what is your name?
Vanessa.
Miss Vanessa, based on your credit and some of these docs that I, reviewed, you're pre-qualified for a $300,000 home.
Let's go shopping.
Let's go shopping. Get you in touch with James. Let's go shopping. And here are the terms. You know, this is what the estimated payment is. This is your down payment. This is how much you need as far as your funds for the closing, right? That's a pre-qualification. Why is it a pre-qualification? They have not taken you through underwriting. And who's the underwriter? The underwriter is not me. So I'm the loan officer. I'm your advocate, kind of like with the underwriter. I'm like, hey, let's build a case. Let's put all this together, all the documents together. And then within every institution, they have a team of underwriters, the actual individuals who are going to look at your application, your documents, your credit, and everything. And they make the decision on whether your loan is approved or declined, right? So if we take you through underwriting and the underwriter makes that decision, then you have a pre-approval. You're like, that's good, that's sound. The underwriter actually looked at my documents. A pre-approval done, I should say, pre-qualification done the right way isn't necessarily a bad thing. If you can get your loan pre-approved, actually get through underwriting up front before you find a home, that's actually the best thing for you, because you know that the underwriter has given the okay, they've reviewed the documents, they have cleared any conditions on the loan, so things that may be needed from you, right? They have cleared it. And what would be left would be things like an appraisal needs to be done when you find the property, right? The attorney's office needs to do the title work on the property. You know, they need to verify that you're still employed at the time of closing, but there are very few conditions that are needed.
And especially in a competitive marketplace where, you know, we've been going back and forth between how competitive the marketplace is, having gone through underwriting, all right, so when your agent, submits your offer, that's something they can communicate to the listing agent saying, hey, my clients are already through underwriting, so that makes them feel a little bit better, a little more comfortable, and there's a better chance that they'll accept your offer. So that's the reason why you want to, if you can get through underwriting up front, that positions you, better than somebody else that kind of is at the beginning stages.
Yeah. And just be very cautious. If you go, I'd love for you guys to all come to me. But if you choose not to and you happen to go to any other lender, just make sure, ask the lender, hey, do I have the option to go through underwriting up front? Some lenders do it, some don't. Right? Yes, we do. We do. We will take you through underwriting and actually give you a commitment letter when we're done underwriting the loan. So that's a very, very good question. The last thing that I want to cover, and then you guys can, if you have questions, we go to the end, is what to do and what not to do as you approach the mortgage. And today I'm not going to talk about all the different mortgage products, because if you do come to me or any other lender, the product, again, that's available to you is going to be based on your specific situation, and we can go into a lot of detail on that. Today I just wanted to cover some general things that helps you no matter what when you're looking at getting a home. So, do's and don'ts, right? So you're like, great, I'm preparing to buy a home. I've even gotten pre-approved. I'm set. So I don't need to make that car loan anymore because my credit was good when I got pre-approved. I mean, I can just skip a few payments now because they've already looked at me. No. Continue to make all your payments on time. Keep your credit just as it was before you got, or when you got pre-approved, right? Or enhance it. There's nothing wrong with improving it. Just don't let it go negative. Get all the items that the lender asks of you. In general, here are some things that you are going to need for a mortgage loan, regardless of who you're applying with. If you are a person that has a W-2 job, all that means is you're not self-employed. Any self-employed people in here? Or 1099s? Okay, we'll cover that. You're not 1099, right? You're not running your own business. Typically what you need are pay stubs covering the most recent 30 days to verify your income, W-2s for the most recent 2 years, bank statements covering the most recent 2 months. You wanna see where the money's coming from, that you haven't had an infusion of cash into your account. It's been, you know, things that you've saved or your payroll checks, different things like that coming in, right? So bank statements covering the most recent 2 months. Identification to validate who you are. If you have other scenarios, like if you're using other types of income, like some people maybe they have child support, then you need a child support order and verification that you've received the child support for a certain period of time. So those are nuances, but in general, that's what you need. If you're self-employed and you're going the traditional route, and that includes being 1099, then in lieu of pay stubs and W-2s, it's tax returns for the most recent 2 years, right, in addition to the bank statements. So get the documents to the lender on time. If you have any changes happening after you've met with that lender, you did on the phone, in person, whatever, there's a change. So what if you're like, gosh, I am getting a promotion at work. Is that a change? Yes. Notify your lender of that, right? That's a positive thing, by the way, but still notify them so they can update your application. When is the promotion going into effect? What's the new position? What's the new income? Because now maybe you can qualify for a little bit more house, and James will be really happy.
So can I go on disability while I'm going through the process?
It depends, right? So what kind of disability are you going on? Is it short-term disability that you have to go on, right? Are you going to return to work before the first mortgage payment is due? Can we get documentation that you're going on disability, you know, from your employer, from you, that when you're gonna return to work? That's that's an actual real situation.
Oh, yeah.
And it depends. But let's say you're going on short-term disability, you're not returning to your employer, they didn't, whatever, approve you, you're just going out.
Oh, no.
You have short-term disability insurance that you were paying for on the side. Short-term disability, because of its nature, it's short-term, it's not lasting forever, can't be used to qualify you for a mortgage. So if that's happening, you're not returning to your employer, and you're just gonna be on short-term disability, you definitely need to notify your lender of that. Yes?
Does the way you pay your rent have any bearing on you getting a mortgage?
Yes, it does. And when you say the way you pay, I wanna make sure I'm understanding you. Are you talking about, like, I can interpret that the way you're paying your rent, I pay cash versus I write them a check versus they debit my account? Is that what you mean? Or is it,
if you're
I'm not paying them on time
Right.
sometime? Okay, that way, that's the way, okay. If you're not paying them on time, and part of your verification for the loan requires verifying your rental history, yes, that could be a problem for you getting approved. If when the lender reaches out to the landlord for verification, they go, hey, you've been 30 days past due.
So
for
that
the last
depends
6
on the
months.
lender, right?
It depends on your situation and whether verification of rent is needed to approve your file. Like some people with great credit, right, they have funds to put down, a verification of rent is not required to document their loan file. Whereas others, depending on the loan program, like you're getting some down payment assistance, the down payment assistance agency will say, yes, you need to verify the rental history for the last 12 months. So not making the payments on time during that time will impact your ability to get the loan. Yes, sir.
What's the, so with having one person versus two people on a loan application, two various different credit scores, what boils down to what credit score does the lender look at?
Good question. All right, let me get my pen out again. This is my page. It's so visual. So remember, we go with the middle score, right? When there's more than one person on the loan, the lender's gonna go with the lower middle score. So here's some scores. That's applicant 1, applicant 2. Okay, so the lender is going to go with the lower middle score. Which is the lower middle score? What's the impact? That's gonna drive the loan programs that you're eligible for. So if the loan program requires a credit score higher than this, guess what? If you wanna stay on the application together, neither of you will qualify for the lower middle score. Right, depending on the loan program. Some loan programs, and I'm gonna get technical, conventional loans, where Fannie Mae is the investor, and I'm getting technical now, but this is important. They will blend, take an average of the middle score. So when you do that, this is gonna get the middle score, the average, higher than 603, and you can move forward together, right? FHA, on the other hand, lower middle score, so this is driving.
What if you go VA?
VA, lower middle score. So conventional loans give you the most flexibility when it comes to what it is and blend the middle score versus taking the lower middle score. So in a situation like this, it's not the end of the world, right? If you're going FHA, and you may not have to go FHA. What if this person is the primary income earner, and this person's income alone can qualify for the type of loan that you like and for the amount that you like? Well, let's just forget about this person. Take them off the loan.
Just off the loan.
Just off the loan. Take them off the loan. Use this person on the loan, right? And all we're gonna do is verify income for this person to make sure it's sufficient, the debt of this person to make sure it's sufficient.
What if it's the other way around?
Oh, this is the other way around. We need to talk about what this person can do to bring up their credit score and how long it will take them to do that. So we may need to look at what's behind these scores. Is it that the credit, your credit card balances are too high right now relative to the limits, and you need to pay it down to get the score up? Then we're gonna need you to go ahead and do that and then come back and do it again. Is it that you had late payments recently and that's what's driving it? Then as you start making the payments on time, the score is gonna come up, and we just need to wait for you to do that. So we're going to look at what can you do to improve this situation if you are the primary income earner and your income is needed to make this transaction work. Some don't change jobs.
Say that again.
Don't change jobs. Unless you're telling me, I always have a unless you're saying, Lisa, but again, I just got a great offer. It's in the same line of business I'm in now, but they're paying me $20,000 more than I'm paying now, and I'm going to be salaried. I had to switch jobs. But talk to me first. It has to make sense. But do not. You're like, Lisa, I am working for, I'm just throwing a name, Grady Memorial right now. I'm an RN, registered nurse with them. But I've always had a passion to open a floral shop. It's just always been my dream, my desire, as long as I can remember. So I'm starting my business making floral arrangements. Do not do that.
Right.
Right? Why? You're becoming self-employed. You have no history of self-employment. And as I mentioned before to the individuals who raised their hand at their 1099, that's being self-employed. You need 2-year history of self-employment. And then we need to see how much income did you show the IRS? Not the income before your expenses, but the income after your expenses. So don't do that. At least I have the salary position, but I'm just gonna go this hourly job now. An hourly rate, so if you take time off, you don't get paid. Don't do it. Don't do it. Don't try to, hey, I get this great offer in the mail for this credit card, say consolidate everything, and they give you a great rate and all. Don't do it. Let's wait till we get you closed, you get the keys, you move in, do whatever you want to do as far as the changes after.
So I just wanna reiterate on those, you know, changing jobs and going from, W-2 jobs to 1099. I mean, those things have derailed, people during the process time and time again. And although that, you know, it, on paper, it seems like, okay, I'm going to a great opportunity, because, you know, mortgage companies, so the banks, they like certainty home loans. Like they want to have that history, that comfort level that, okay, hey, but you have the ability to make those moves, you know, make those payments. Now, if you're closing February 28th, by all means, make that move March 1st. All right, after we close, after we take the pictures, after they verify income, after we dance, you know, do that after, but not before.
Yeah.
All right, so there's a time and place, and part of it is, you know, communicate with your team, right? Your team being your lender and your agent on what's going on. I know we like to make our moves and keep things private, but you know, this is a time where, you know, you need to treat us like doctors. You know, almost like doctors. All right, but at least tell us what's going on, so financially we can position you guys for the right move and position you guys to take those right steps.
Absolutely.
We can go back to quiet mode.
Don't put large sums of money in your account unless it's fully documented. You're like, Lisa, what do you mean by that?
Yeah.
Like James is saying, we like certainty. We like to be able to paper trail where things came from. So let me give you an example that I hear often that we cannot paper trail. Lisa, I don't like banks. I'm skeptical. I just keep money under the mattress. Or I keep it in my safe at home, or I keep it with my cousin Larry, whoever, grandma holds on to it for me. And now that I know I'm buying a home though, I'm just gonna go put that $10,000 cash in my account. It's no, right? Or you can say, Lisa, I took that money out of my account 6 months ago and I just put it under my bed because I didn't trust the bank. And now I want to put it back in there. And we cannot paper trail it. It's cash. How can I independently verify cash, independent of you? It's not possible. Right? I have to depend on what you're telling me, and that's not a good source. Whatever you tell me is fine as long as you can back it up with paper. That's what we have to show the underwriter. Right, James?
So if I do have a large sum of cash and I want to buy a house, how old me and I make a deposit? How long does that need to be in the bank before you guys can use it?
Before we see it, I'm on camera, right? We need, what did I say? How many months of bank statements? 2 months of bank statements. So, when you provide the 2 months of bank statements to me, I can't see a $10,000 deposit on it, right? I cannot, because I'm gonna ask you where it came from. Now, if you put the money in the account 4 months ago, and you're giving me your 2 most recent month statements, I don't see any large deposits. I just see that you've been maintaining this balance all along, or the paychecks are going in to add to it. It's fine. It's what we call it, the funds are sourced. I can independently and seasoned verify where everything that's in there, the recent deposits came from. You can document it.
So deposit, if you're planning on buying for the summer, deposit.
I'm not gonna answer that question.
No, I'm not. I'm just making a statement.
Oh, okay, good.
Right. Deposit the funds now. All right. You know, if you're planning on buying, you know, 3 months from now. Okay. So before he requests your information, deposit those large sums. Anybody have large sums of funds in it? Let me stop. Okay.
All right, last one. Don't close, open, transfer, accounts. Don't mess around with your accounts. Talk to your lender, right? One key thing as it relates to this, a lot of times when people are preparing to apply for a loan, something I've seen them do time and time again that messes them up, they don't just pay down their credit card balances, they close out the credit card. that is going to hurt your credit score, right? Do not close the card. You can pay it down to zero. Do not close it. Why not close it? So what if you're closing a card that you've had for, I don't know, 10 years? What did we say? 15% of your credit score is related to the length of your credit history, and you just close out an account that was the start of your credit history? It's gonna have a negative impact on your score. So don't close out the account. Interestingly enough, the other thing is installment loans. Sometimes you have to pay off an installment loan to qualify, right? Because it's messing up your debt ratio. The interesting thing is, when you pay off an installment loan that you've been paying on time, the effect on your credit score immediately after paying that off is the score is gonna drop. Did you know this? It's gonna drop. It's gonna drop. Because you just removed that installment debt in the mix.
Yeah, I paid off my car and then it went down. I'm like, this should be helping and not hurt.
It's gonna go down. It's gonna go down. So, in a situation like that, the best thing to do is, and again, that's where you kind of interview your lender, and if you're not working with me, working with somebody else, they should be telling you, you're gonna need to show enough funds to pay this off, or we're gonna do it at closing. We're gonna make it a condition at closing, right? So that you bring enough funds that's sourced in season to pay it off. But don't go pay it off beforehand. Sometimes you think, I already know this is gonna mess me up, I'm gonna go pay it off, and then the lender pulls your credit after it's paid off. And you're like, oh, why did my score drop? Don't do it. All right, any questions? That's preparation for getting a mortgage. That's the ins and outs, and you guys have my cards. If you have any personal, specific questions, I'm happy to answer them. Thank you.
Thank you, Lisa.
Quick homecoming, not homecoming, but housekeeping duty. Everybody that's watching this on Zoom, there's a form there. You guys can, I'm looking at you guys, we'll talk to the Zoom people. If you can fill out the link out there so we know we captured your information, so we can if you have questions, we can help you out later. So, sorry, turning over.
Hi everyone, my name is Iman. I'm a real estate agent here with Keller Williams. Two things about me: I'm a twin, middle child of 7, and the reason I got into real estate was to educate, of course, the Black and brown communities about the importance of real estate. So we've already talked about the pre-approval. We talked about finding the agent, and now we're kind of going to talk about the home search. So it's important for you to make sure you have that list of must-haves and dislikes when it comes to finding the home that you love. Because once you have that, and you know you're going with your realtor to find the house, and you find something that fits all your criteria, you want to make sure you put in a competitive offer. Because just because it's here today doesn't mean it's going to be here tomorrow. So it's important for you to know those, your likes and your dislikes when it comes to finding the home. I'm going to go ahead and pass it off to Raisa, and she'll talk more about this.
Some technical difficulties, guys. Good afternoon, everybody.
Good afternoon.
Well,
It's about
you guys
so.
are doing good. Good afternoon, everybody.
Good afternoon.
Hello, my name is Raisa Washington, and I'm a realtor here at Keller Williams Cityside. And I'm going to go over a few of the home search tools that you and your agent have access to. Beginning with the multi-listing service, or MSL. That's literally our real estate best friend. We use this tool to get exact needs that you guys would want in your home. And as Iman explained, you have to know your needs as opposed to your wants. Using the MLS, we can look for a home that has a master bedroom on the main level because maybe your mom's going to be living with you and you want to make sure she has that comfort. Or perhaps you would like to have a home specifically in the Campbell Middle School District. The MSL is a powerful tool that helps us accomplish all of that. Next, we have our agent network. which is vast. I mean, agents know other agents, right? And by a show of hands, how many of you guys have used Zillow, Redfin, or Realtor.com? Everyone. I mean, it's available online. As your real estate agent, we have access to all of that information plus way, way more. We can build a rapport with the listing agent, which directly represents the seller, so we can get to know what it is that the seller wants, like what is it that they want out of the deal, to make sure that we submit a clean deal right off the bat. Again, about our agent network, we're able to post in our little chat room, you can say, some listings that perhaps aren't publicly listed. They're not on the multi-listing service. We'll have access to that. We'll be able to go in and say, hey, let's get this deal, let's get a meeting, let's set something up, because my client really likes this house. As your agent, we're going to work diligently for you to make sure that whatever you see, whatever you want, you'll be able to get. Next, we have our agent websites. Our Keller Williams Home Search, you use that in the comfort of your own home to perhaps look for what it is that you want in a home. Again, knowing your needs as opposed to your wants is super important, because when it is time to go out and look for that home, you want to make sure that you're looking at places that you would literally move in tomorrow, if possible, in a perfect world. When you go to brunch on Sundays in your favorite neighborhood, perhaps you'll see a yard sale that says home for sale, and you like the house. Take a picture of that, let your agent know. Looking for yard sales, attending open houses, things like that are how you are going to actively do your part in looking for your dream home for you and your family. Another thing that we strongly suggest you do is if you perhaps have certain subdivisions next to you, they have model homes that are available. When you go to those model homes, make sure you tell them that you are working with an agent, but they'll be happy to let you see the model homes. You'll be able to see whether you perhaps want a gas stove as opposed to an electric. I mean, there's so many factors that come into it when you're looking for a home, and those are the things that you can do in the comfort of your own, or in your spare time rather, or in the comfort of your home.
I just want to reiterate that in terms of if you go onto a new home, if you go looking at new homes, make sure that you tell the person behind that desk that you are working with an agent. All right, they represent the seller. All right, they're going to be nice, they're going to be personable, and you can be like, oh, okay, I can just sign with them. But they're not going to be looking out for your best interest, right? The folks back here and up here, me, of course. We're going to look out for you guys, right? And they're going to take you through the process and make sure you get the right incentives and you get the best deal. So you got to go in there and tell them that, hey, I am working with an agent. Otherwise, they'll try to cut us out of the deal. So.
And we don't want that. We don't play like that. And of course, the power of the internet, the World Wide Web. You use that to actively look. Like I said, we have our Keller Williams home search tools that we'll provide to you as your agent, where you can go on there and say, hey, I want 3 bedrooms, 2 bathrooms, yard. You'll be able to have access to that just by using the World Wide Web or any other online tool that you prefer to use. Okay? Next, we'll go over step 1 of buying a great house. Now, how many of you understand that even though you buy this house, you kind of have to live in the neighborhood? Like, the neighborhood affects your living. I mean, if you work from home, you may have railroad tracks that interfere with that. Or perhaps you need grade A schools because you have young children that are growing up and you want to make sure you provide the best for them. These are things that you need to do when looking. That's literally like step 1 when scouting the perfect home, the neighborhood. In real estate, we like to say location, 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 because you can't change the location of your home, unfortunately. It's there. So you have to deal with everything that's surrounding your home, including the neighborhood and neighbors. Now, certain neighborhoods are designed to fit your lifestyle. Like perhaps you may want to have like a work, play, live atmosphere where you can work close to home, walk to the park, or walk to the gym. Those are certain neighborhoods that are there for you, and scouting the neighborhood will help you figure out what it is that I like about this neighborhood. Even going in the neighborhood day and night to see the traffic patterns. How's the traffic getting to work every day? Will this work for me realistically? How use Google Maps, or Maps my favorite with the iPhone. You just see how far is my mom from here, like how far is my best friend from here. All that's super important. And if you want any special information about the area, such as like demographic or crime rates, your local authorities, school officials, or even fire department people will be happy to assist you in that area, as we as agents don't disclose that information.
Yeah, and there's a we cannot give you that information. All right, so it's not that we don't want to.
Right.
That's something that we can't be guiding you towards, one neighborhood versus another one. So that's why, Google is your friend.
And to kind of sum it all up, fall in love with your neighborhood as well. Make sure you like the parks that are near, the recreation places, and also the churches if that's maybe your preference. Just make sure you like your neighborhood, because your home is there and you cannot change that. Thank you all for your time.
Thank you, Marissa. So now, we have fallen in love with that perfect home. We found the perfect location. And just to give an example, I found my home in a perfect location. I actually wrote the neighborhood. Every time I dropped off my daughter at school, I went to that same neighborhood. And I just looked for a house to come on sale one day. It happened just like that for me too. So, what do the seller want? How can we win this offer? What's gonna make it amazing and attractive for you to win that offer? To find out what our payments look like, what will our down payment look like also. How much earnest money can we get? Normally it's 1% to 2%, but again, we gotta make it attractive to actually win the offer. What's gonna be included in the home? We also have a disclosure. We actually can go over and see whether it's the washer dryer, the refrigerator, what will you have to purchase, so we can make sure that's the perfect home for you. And after all of that, we're basically making an offer. The offer should be accepted, but if not, we can counter offer, they can decline the offer, but building a relationship with the seller agent will actually win that offer. We're gonna actually call the agent. We're gonna find out, what are you looking for? Who do you want to close? What's gonna win it? What do you want to net? So we're building a relationship, not to go back and forth. We want to write a clean offer the first time. Next, I'll pass it over to Ray, where he'll give deep dive into making the offer.
How we gonna when your offer is accepted? When your offer is accepted, you give your earnest money to the closing attorney of your choosing. It's usually due within 3 days after the offer is accepted. Next, we'll be going over the inspection. During the inspection period, your inspector will go over what's going on and what's wrong in the home. And you can ask for those to be repaired in the contract during that due diligence period. You either ask them to be repaired, or you can get those in seller's possessions. Next, you'll do your appraisal once the inspection is done by the appraisal. Then after you get your appraisal done, you want to try to shop for home insurance in case anything happens to the home. You want to be responsible for any like a fire or anything like that. Then you do a final mortgage details. You want to make sure you know how much you do at closing, what your monthly premium is going to be, what your payment is going to be for the month. Then you do your final walk through the home probably like the day before. Just kind of make sure the home is in the condition that you want it to be when you buy it. Next, I'll be bringing up Toussaint Hill with HDMX Home Inspections.
Can you help me? Can you pass this out for me?
Hello, everyone.
Hello.
Actually, HDMK Inspection Services, and my name is Toussaint Hill. It's nice to see everyone out today. It just means that the market is picking up and people are looking to buy homes. And that is where I come in, because you never want to waive a home inspection, because typically when you make an offer on a home, you may walk through the house maybe once or twice, 20 or 30 minutes at a time, So you don't really see like the defects that may cost you a lot of money down the road. So the importance of the home inspection is there because a home inspector is a trained eye. You can walk through a home, you do a very detailed home inspection. It takes me about 3 hours to do a home inspection. That includes inspecting everything on the exterior of the home, which includes the condition of all the surfaces of the exterior, the roof, the landscaping, any fences, any outbuildings, any decks, the foundation. We checked all the hose faucets on the outside, make sure all that's working properly. On the interior of the home, we check everything from floors, walls, ceilings, condition, and type of surfaces for all of that. We check everything in the kitchen, you go in the attic, you go in the crawl space, that's there as well. So yeah, you never really want to waive the home inspection just because it can save you a lot of money. And what's your question? Yes.
Yeah, you guys do a pre-termite inspection?
So we don't do pest, but we partner with other pest control companies to come out and do it at the same time that we do. So when you're walking up to a home, you know, you can do a quick scan yourself to determine whether or not this could work for you or not. Typically when you pull up to a house, the exterior of the home is gonna look like the interior of the home. If they maintain the outside, they'll maintain the inside. If you pull up and the house is dirty, look like it hasn't been pressure washed, maybe some gutters are sagging, typically the inside is gonna be a lot of deferred maintenance in there as well. So when you get to the house in the walkthrough, take a lap around the outside. Look at the outside, look at the HVAC units, visually see if they look old, probably are old, you know? They look newer, they're probably functioning. And as you walk around, just note the type of material on the surface of the wall, whether it's siding, you know, even touch it, you know, just knock it, see if it still has good structural integrity. You definitely want to check decks as well, because decks deteriorate if they're not properly built and properly maintained. So if you're on a deck, you want to walk up the steps, shake the handrails, make sure there's no deteriorating boards anywhere. So all of this you can do as you're walking around the home on your initial walkthrough, just to determine whether or not it will make sense for you. And when you're inside the house, just visually look at the walls. You know, you can tell whether or not someone maintained the home, whether or not they had kids or dogs. You can see evidence of pets throughout the house, things like that. Kids may put holes in the walls. One of the bigger things you want to look for when you're walking through the house is cracks on the wall. Cracks on the wall indicate some sort of foundation issue. It indicates the house may be settling something. So if you see a crack on the wall, you know, that may be something you want to investigate further. Okay? Any questions about the home inspection process or anything like that? Yes.
At what point in the process should we get the home inspection?
The home inspection is during the due diligence period, so that is something that you and your agent determine. Typically, it's anywhere from, what's the typical due diligence period you guys do?
3 to 5 days.
3 to 5 days, yes. So within that 3 to 5 day period, the home inspector will come out, do the home inspection for you, we'll walk you through it. So for myself and my team, we do the home inspection on site, do it on our cell phones, and we have the report in hand. And if you come to the inspection with us, we'll walk you through the house and point out anything you saw with the report on a tablet, and it's read for free.
For new construction homes, is it needs to do the inspection then, or?
Definitely want to do new construction homes.
For
because
sure.
Every builder,
Yeah.
every builder doesn't do the same type of quality work. So on your initial walkthrough in a new construction home, pay attention to the details, because the details will tell you whether or not the builder actually took their time. So pay attention to the corners, see if there's any, if they slacked off in sanding the corner properly, you know, they may have slacked off somewhere else, you know. So just pay attention to those things. Any other questions? No? All right. Yes, one more back there.
You get a lot of pre-inspections for sellers?
It does happen sometimes. So if you guys are looking to sell a home, it could help make the listing stand out. If you have an inspection, you put the inspection report there with the disclosures, and it just makes the house stand out because most people don't do that. But we do that, yes. Yes.
Just as a note, hi everyone, I'm Brianna Ward. I'm with Perry & Associates. I'm a real estate closing attorney, that's a great question to ask, in regards to just getting those pre-inspections at the seller, but you also wanna keep in mind that then you are now in knowledge of any, repairs or things that need to be done. So, again, just like Lisa may have said, I can't say more than that, but.
Also, there's still some neighborhoods here in the metro area that have septic tanks. So if you get a home that has a septic tank, or you're in a contract on a home, a regular home inspector like myself, we don't fully inspect the septic tank. We point out where so there's a valve in the ground, you can pop the valve and you can make sure it's flowing properly. We point that out. But you want to either verify that the seller has maintained it through receipts of service, or you want to get someone to come out and do septic tank inspection, which includes digging down to the septic tank, opening it, and make sure it's flowing properly. Because if not, they're very expensive to replace. And you want to service it, if you buy a home, you want to service it every 5 to 7 years.
Is any of this information public record? So like say if they do it, is it like somewhere like a contract?
So like if they service septic tank, if you see it from public records,
Anything, any kind of service, maintenance, problems with the house, like, you know, when you get, obviously, when you get your car serviced and maintained, it's like a regular, is there anything that follows houses and stuff like that?
So there's so if a house has an addition, there's a permitting process for that. So you can see that they built it to code, there's a permit for that. If the house if through the inspection, so I can point out if this is an addition, and you want to make sure and confirm that it was done and permitted properly, or you may have some trouble down the line, and she could probably talk more to that. Any other questions? All right, well, thank you.
One statement about the, when you guys get under contract and you're doing due diligence, and definitely always get your house inspected. But keep in mind, you know, I mean, so they're gonna document everything, but everything is not something you need to request. All right, so you just focus on the major pieces, you know, in order to, you know, again, you know, so you know going in, and depending on the competitive situation, there may be times where, you know, again, if there's multiple offers and you want to bid, you know, you may not be able to get everything you want, right? But know that when you go into home ownership, you're going into home ownership. You know, there's going to be some expenses with a home, but the payoff is going to be in the equity you build up, the appreciation, and being able to write off the interest rates. I mean, the interest payments at some point down the line. So you're going into a different world, right, where you're not renting, and you can't just require somebody else to fix all the problems. You're just know that what you're going to get up front by having that inspection. Okay.
So, my name is Brianna. As I said, I'm with Perry & Associates as a real estate closing attorney. I just wanted to touch on a few things in regard to the closing process. I know that there's a long process from getting approved, finding your home, making that offer, getting that offer accepted. It's almost like you're going through high school, right? And the closing is graduation. You've done all your hard work. Now you're just dotting a few I's. And so you want to make sure that you have the right mindset when you're going into your closing. And the reason I say mindset is because you don't really have to do much. Everything has been laid out for you. I'm as your closing attorney, or if you choose another closing attorney, you work with another closing attorney. It's going to walk you through all the pertinent documents that come in buying a house. They're going to make sure you're understanding all the things that are inclusive of that, your loan amount, your interest rate, when and how you should pay. They'll walk you through all that, right? So you're going to be prepared in that way. The way I say mindset is because you want to make sure you're thinking about the long term of becoming a homeowner. So there's a couple things I want to touch on. What you see here are a lot of fees and taxes and big words, and all. But what it means is this is what you're going to have as a line item of all of your closing costs, right? We're going to walk you through each one of those line items and explain what they mean. You don't have to worry about what they mean right now. The biggest thing I want to point out to you is on that top right-hand corner, title insurance. Okay, title insurance is going to protect you as your own, as the owner of the property. And anything that I always say is you see the lender's insurance and then you see the owner's insurance, right? Lenders are always going to protect their interest in
lending you the funds to purchase a house, they wanna make sure title is good. If they're protecting their interests, you wanna protect your interest as well. So even though owner's title insurance is optional, think about what the long-term implications of getting title insurance is, right? So title insurance is essentially protecting your interest in the property. So what we do as a closing attorney is we go through a title exam. We go back 50 years on a property. We make sure that every owner who sold to a new a new seller who sold to a new owner transferred that deed properly so that your interest in that property is protected. If there's anything that we need to correct, because we saw in that title exam, let's say someone sold a property and they split it down to 2 plots, and they sold 2 different properties, but they forgot to record that. At that point, you wanna make sure you correct an error in the title exam process in that chain of title before you get to closing. Title insurance is gonna protect you if for some reason another closing attorney messes up and does not do that for you, right? It wouldn't be. So if that happens, your title insurance agent is gonna hire you an attorney. They're gonna protect your every interest in that property, down to the value of the property. So what that means is if for some reason, because of a clerical error, you actually bought the wrong property. Sounds crazy, but it happens. It's happened. Your title insurance is gonna say, we've protected you to the full amount of your loan up and through that property. We've even protected you for your new property value. So if you need to go buy a whole new house because it ends up not being your house, your title insurance is gonna protect you. So if your title insurance is, let's say, $700 to $1,000, could be that, could be less, could be more. It's a one-time payment. The entire ownership of your property for the next 30 years is protected by that title insurance. So do you wanna pay a $1,500 fee one time to make sure that your $400,000 house is protected for the entirety of the loan? Yes. You wanna make sure you put that on there. Any great lender is gonna tell you to put it on there. Any closing attorney is gonna tell you to put it on there. Any real estate attorney or real estate agent who's great is gonna tell you to put it on there because it protects you. So we wanna make sure that you are thinking about, do I make sure I get my title insurance? Is it listed there on my HUD statement, my settlement statement, my closing disclosure? That's at the top of your loan package when you get ready to sign everything. Okay? The other thing I want you to think about is what do I wanna do with the property in terms of my ultimate goal? So am I thinking of adding someone to the deed because just in case, God forbid, something happens, I want this to transfer to my daughter, right? Am I thinking about the fact that I'm gonna be going to study abroad and now I need a power of attorney to sign to buy my house? So I gotta get my uncle to come do that for me. Go ahead and let your lender know. Go ahead and let your real estate agent know, because then I know. Then I can go ahead and put your paperwork together. I can allot more time because Uncle Leroy has a bad leg and it's gonna take him a while to get up here. I can extend the closing. Or I need to go out to him and sign at his job because that's the only way he can make that happen. That's fine. You just let us know, okay? So I want you to keep in mind what you want to happen after the property, and I want you to keep in mind your title insurance. So all in all, your closing attorney is going to make sure your title is good. They're going to conduct your closing and explain everything to you. You're gonna see a list of closing fees, and at different closing offices, it's gonna look different. But at our office, it's gonna be a line item. That means I can explain every charge that we put on that paperwork, okay? That's gonna be transparency. What are you doing with this cybersecurity fee? Well, that protects your wiring instructions in the wire that you sent over to us, right? So, I just wanna open it up for questions. I can answer any of the, or give more context to anything that's listed here. But I wanna be able to also answer some questions about title insurance and anything that you guys might have about the closing process.
Can we choose our own closing attorney?
That's a great question. So normally, your listing agent and the seller is responsible for choosing a closing attorney. But you wanna remember that rapport that your buyer's agent or your real estate agent is gonna have with the listing agent. They may be able to call them and say, hey, you know, both the seller and the buyer both live in Cobb County. Can we make sure that we get the closing at Perry and Associates? Hey, can we make sure that we get it out in Stockbridge because both of them live over there? Can we do it out of Wells Fargo because that's the lender? Or can we do it out of Certainty Home Loan because that's the lender, right? You just want to make sure that when you are selecting your closing attorney, if you have an opportunity to do so as a seller, you're just walking through those fees with them and you have a full understanding of that. If you have a suggestion for a closing attorney, you can usually prompt that to your agent, and they'll prompt that to the listing agent as well, okay?
one question, one statement. Closing attorneys matter, all right? And in terms of making things happen, sometimes you need a relationship with your closing attorney. So I would lean on your agent. The reason why I use Perry is because, there's been times where we had to, make sure that title was clear beforehand or do some research on the front end. In order, on the listing side, or even on the closing side, just, because Uncle Leroy is notoriously late, and I want to be able to extend, get a better time, a favorable time on the schedule. And not every attorney that can close a loan is in the business of closing loans on a regular basis. So you want to have somebody that does this on a regular basis. Otherwise, it can jack up your process. They'll miss a step, and if you're on the buy side, you'll be, everybody will be at risk of the transaction, but it'll delay it. So, lean on your agent for one that a closing attorney that again does business on a regular basis in this space.
And one point I will add is that any real estate transaction in the state of Georgia requires a closing attorney. So just by saying how broad that is, you're always gonna have, just like you can get great quality chicken, you can get not so great quality chicken. You know what I'm saying? It's gonna all come at a different price, but what I can say at Perry & Associates is that we really try to be economical and honest about those fees, right? So if there's ever a time that an agent is looking at a fee and he's like, oh, my client is concerned about the amount of the split closing fee because we're gonna have to go out to them, we can work on that. And that's something that your agent is gonna be able to give me a call about directly and say, hey, this is the first time home buyer, she's scrimping and saving everything she's got. And she's ready to close, she's got exact amount, but this split closing fee is not, it's adding to her, right? We'll work that out. And so that's why you wanna make sure that you're choosing a closing attorney that has a close relationship with your agent as well, okay? And did I see a question in the back and then in the front?
Is that amount included in the loan, or is that like separate?
So the way you'll see it listed is in your closing costs. So if you imagine that you are incurring charges from several different areas, right? So as a buyer, you're gonna be incurring charges for the loan itself, your origination fees, your processing fees, and the cost of loans, right? And then we'll have listed costs to Perry & Associates. We're gonna include the title exam, your closing fees, and then the protection of your cybersecurity and all that good stuff, okay? And that's something that we will line item for you and put down. Okay, I think that's all I have for you all. If you have any questions, I'm gonna pass around my card as well. Please feel free to just shoot me an email if you do have a legal question. Always feel free to ask your agent because they usually have our email and our cell. We might be able to answer a question for you while you're in the house, right? And get an answer to you really quickly. Okay?
All right. Well, thank you guys for joining. Do you guys have any additional questions or thoughts about the home buying process? I'm jumping in like I'm not supposed to be Flavor Flav.
Yeah, boy. Where does the mortgage rate stand right now?
If only there was a lender that could answer that question.
Good question. So there's a conception that there is one mortgage rate out there. That there is no such thing, right? The rate is going to be specific. Of course, there's an environment of rates, what the cost of the rate is, and so forth. The rate for you is going to be based on what's your credit score, what's the loan program you're using, how much are you putting down, right? That's going to impact the rate. So the rate you get may be different than the rate somebody else gets, right? There's not just one rate. There's not one size that fits all. So when you listen to the news, you hear things like, oh, the average mortgage rate is 6.875%. And they don't go into, that's for somebody with a 780 credit score putting 15% down. You see that in the fine print. I always read fine print. But most people don't, right? You see that there? But talk to your lender and they'll tell you, okay, based on your scenario, here are the rates that are available to you.
And can you buy down your rate?
Absolutely, yes. And buy down, so I don't want to throw out a term, make sure everybody understands what buy down means. So again, you have a range of rates. You can choose a rate with no additional cost to you. Lenders may say that's the par rate. Or you can go with a lower rate and you'll be paying more at closing. It's gonna be included in your closing costs. That term is called buying down the rate from the rate that doesn't cost anything. So you want a lower rate, you'll pay a little bit more for it.
And some of that can be handled with seller closing concessions if the market, permits it, right? In other words, if you have multiple offers on homes, you're probably not gonna get any concessions from the seller. But in an environment where homes have been on the market for 45 days or a longer period, then that's an element that you can negotiate. We can see, and all they can do is say no, right? The other thing about with this rate talk and interest rates, 3% is probably gone forever. All right, we're in an environment now where they're a little bit higher than everybody was used to. But quite honestly, interest rates on average have normally been in the 5 and 6 range over the long haul. All right, people have been buying homes, right? You buy a home because not because of an interest rate. You buy a home because of what's going on in your life. All right, even your kids. You want to put your kids in a better school district, or your job moved you to a different market. All right, and you know what? At the end of the day, everybody sleeps and pays a mortgage. The question is, are you going to be paying yours, right? And are you going to be able to create wealth and generational wealth by having an asset that that you were able to buy at one point and then watching it grow? Homes appreciate on average 4% a year. Now, we had some amazing years where they were jumping up, 15, 20%, right? And that may happen again, but really, you buy a house. You're going to pay down, the payments you make are going to apply towards that principal, and more of that house is going to become yours, right? And then, quite honestly, the sweetener, the icing on the cake is the appreciation, that now, okay, hey, now that 10 years down the road, not only did I make payments on this house, and took it from $215 to $165, but now the house is worth $395, all right, and I have this equity that becomes a tool that I can use. So now my 10-year-old kid now is 20. He's moving out the house. Let me sell this house so they can't move back in. Or if you want to plan for your retirement, it becomes an asset that we can use. And quite honestly, there was a period of time where faces that looked like ours could not buy homes. Right, they did everything to keep us out, right? So it's important that that we buy. I mean, I think it's important that we become owners, and it's important that we educate our children by our example by the work we do. That buying a home is the next step, right? I don't want them, because too often you have communities that again they rent and your kids grow up and say, hey, I want to give you this fly apartment. Right? But the magic is in ownership. All right, now so that's why I'm happy you guys are here today. I got 2 more books to give out. I don't know. You got a question or?
Yeah. So James, can I add something? Just
yes.
In preparing for home ownership, and James is absolutely right, especially in communities of color. One of the biggest challenges to home ownership is, the down payment, right? Having the down payment and really being prepared. The gentleman up front asked a question about those closing costs is included in the loan. They're not included in the loan. So when you're looking at buying a home, you should prepare for a down payment and the closing costs. As James mentioned, depending on the market, a seller may, and how competitive it is, a seller may assist you with the closing costs, they may not. But those are the 2 components that you should prepare for. Down payment and closing costs. Is there assistance to help in certain cases with down payment? Yes, there are down payment assistance programs. Will everyone qualify for those? No. So it is important that you plan out and do save and be prepared. In the last couple of years in the market, those folks that were able to win the offers and things like that actually had the funds for their down payment and closing costs because sellers weren't covering any closing costs. So don't let that be the reason why you don't get into your dream home, is because you haven't planned and prepared for what it's going to cost you to get into the home. Don't let that be the barrier. If down payment, you don't have all the funds, talk to me. We have down payment assistance programs, but I'm also gonna tell you, here's all the rest of the funds that you're going to need, so you're prepared for that.
I got a question for everybody. So when Lisa pulls your credit, what score does she use? What's the score that she uses to qualify you for a loan? You got all answers.
Right,
I don't got that many books. I can hear it over here.
First to raise your hand.
I heard the middle over here. All right. See if I can test y'all on something else. All right. What team don't I like? No. Now, so I mean, is a home inspection optional, or should you have one? Yeah, it's optional, but you should have one. All right.
What kind of question was that?
Hey, give me a question. Give me a question. I know, right? I know, both of them.
What did James say normal appreciation was? 4%. Who said that first?
Boom.
There we go.
All right.
All right.
Ask about me, what I said in my insurance. Anybody caught that?
No, you ask. Speak up.
Oh, well, what should I say? Well, what does anybody remember from my portion?
You
What
a
I-
twin.
Okay.
All right.
First guess. First to arrive. How many times do you have to pay for title insurance?
Once. Oh, too many answers.
Yeah, but she just got one. One more question. Somebody give me a question. Who was the first one here?
They were.
Yes.
They were.
Oh yeah, they got my notes.
Hey guys, we really appreciate you coming out. Do we got any more? Let me pull out my wallet. So I know you guys signed up. Do you guys have? Do you know who the agent was that invited you to? You're here. Make sure you note that. I want you to work with them. If you guys got any questions, these are all great agents, and they're working hard on their craft. And we want to get you. If you want to get an application done, see Lisa. I think everybody has a card, right?
Yeah.
All right, and now's a great time to buy. Now is a great time to buy, and start. Everybody's home buying journey is different, and it starts differently. All right, I've bought several houses, but there was times when I couldn't buy, and I had to get myself in position to buy. So don't be afraid of doing the work. All right, it pays off. I've had clients that come to my home buying seminar, and 3 years later they're ready. And I've had some that, hey, boom, let's go, James, I'm ready to go. All right, the whole thing is putting yourself in a position where you guys can make that move. And you got to sleep someplace. Might as well be your own place, right? And it might as well activate what I call that secret bank account, where you get the equity and the appreciation, right, and the tax savings. All right, because that's going to put money in your pocket in the long run. All right. So, thanks for coming out.
Thank you.
Question?
We have food here.
Yeah.
So please. Come talk to people that, have some answers for you. Can you go through that? We're here.
All right. Cool. Man, good to see you in person. Good. Yeah, not this time, but
every time I try to, I just next time. Yeah, next time. Y'all good though, so
Well, thank you for inviting us.
They tell me this was their first time.
Oh my God. How are you? Hi. Killed it too. Next time, Marcus. Next time.
Now I'm be there next time.
That's what I told him. I
said, you gonna be there next time. Yes.
This was great. I hope it goes good. Bye. Thank you all for coming. Thank you for coming.
Hey, so
Everybody gets Bye-bye. Thank you very much for coming.
yeah. You got to say it. Yeah, you got to have
Right, this is the new norm.
Yes, and it's doable.
Did you have a question?
I did.
Good to see you. Good to see you.
I had two. Don't laugh.
No question is a silly question.
I'm wondering, so like, as I asked the question earlier about like it would make sense if it's both arguments. Show that we can afford more, but like his credit score is significantly lower than mine, so I know like the lower middle. Okay. Is there ever like an interest rate where, as the lender, you would be like, your rate is going to be really high, or is
No,
it just...
because the rate does impact. I should say the score does impact the rate. Right. So depending on the score, like we have loan programs that will go all the way down to like 5 years, 2 years. So I can go, hey, you get your approved for when it's, and I'll say, but this is what your rate is. You can lock it in your credit card. And the rate may have a cost, which will impact your monthly cost. So then you guys have to determine, all right, we can get approved for what we want to get approved for, but this is how much cash we need because of the score. Can we do this? And here's the thing, right? We always say, look, rates cycle and situations change. Can you refinance a loan down the road? You sure can. So you can start out the loan process with, okay, it's a higher rate than somebody else would get, but you're getting the price home that you want because you're using both of your scores, but your price is paying for the rate. You get into the home 24 months later, things are better now, and you decide, let's refinance. And let's say the rate market has gone down, or even if it's the same, because the score is better, you probably get a better rate, and you'll improve things. So a rate is just a point in time. Nobody keeps their same mortgage for the 30 years. If you get a 30-year loan, but for whatever reason, they never keep it for 30 years. They either refinance or they decide to sell, or they go into new loan. So the rate is not a permanent thing. Yeah. So you have to decide what's your priority. Home price or the rate.
And then the other things you mentioned, the 30% loan on your credit. So is that as a whole? So like for instance, if I have 5 cards, one card is higher, but the rest are like under 30%.
Yeah, so take it as a whole. So what's your total credit limit? And then what's your total balances? And what percent are the balances of that total limit? Because that's what is impacting your credit.
No. Okay.
Thank you so much. Call me if you have any other questions. You got my card or email me.
Okay. Thank you.
All right. Happy to help. You're welcome. Enjoy the rest of your weekend. Yes, ma'am. You're very welcome. Thanks for coming. Thank you for coming.
Reach out to you. I'm gonna see you.
Okay, great.
First time home buying.
Wonderful.
So,
Condo, something,
Okay.
something.
Rita looks like that.
Yep, so we're gonna.
Home buyer seminar.
Yep, so I'll introduce you in the email.
Okay, wonderful.
And then she'll send me and just follow her instructions.
Yeah.
Go ahead.
Yes.
All righty, thank you.
Oh, Rita
Nice
looked
seeing
like
you.
that
Thanks for
because
coming.
her name was crazy.
I know
I was like,
exactly.
I was like,
I know exactly.
oh, hey,